Now, ladies and gentlemen, all of EBRD's annual meetings are special in their own way. But this year's is exceptional, as it coincides with the 25th anniversary of our founding. Now, over the last quarter of a century, the EBRD has invested more than 105 billion euros in over 4,500 projects and delivered, I believe, significant impact in a total of 37 countries. Overall, across our region, the EBRD, I think, has played a really special role in enhancing the private sector, encouraging entrepreneurship, boosting market competition, and integrating our recipient countries into global supply chains. That's the bank's record over the last quarter of a century. I believe it's a record of substantial impact, a record of investing in changing lives, a record which we also added to greatly in the last year, investing a historic high of 9.4 billion euros in over 380 projects, with 95% of those projects assessed as having good or excellent transition impact potential. In our most recent review of reform momentum in our countries of operations, we observed a very encouraging shift. In a departure from the dynamic of previous years, we saw that progress in crucial sectors significantly outweighed reform reversals. The EBRD in its work have helped prepare the ground for this rallying of reforms. Let me give you an example. In Ukraine, we led the creation of an independent business ombudsman institution. This provides a recourse mechanism for businesses with legitimate claims against state agencies that infringe on their rights. Nearly a quarter of our debt operations in 2015, nearly a quarter, were in local currency, a far bigger proportion than for any other multilateral bank, and much more appropriate, I believe, for the SMEs in our regions. At the end of last year, our directors approved our first strategy for the promotion of gender equality. We've already moved forward to implement this strategy, and this year we're going to see breakthroughs in non-traditional areas of employment for women, stemming from our work with energy and infrastructure clients. Now, we've mobilized to boost the resilience of refugee-hosting communities in Jordan and Turkey. We hosted a very successful conference here on engaging with the private sector to help those communities back in February. And we're helping with the development of SMEs that will support local communities and absorb these refugees into the local economy. And we're actively involved in projects to urgently upgrade municipal infrastructure put under acute strain by the arrival of refugees from Syria. Since we last met, the Board of Directors has approved the Green Economy Transition approach, which puts climate finance even more at the core of what we do. So we now aim to invest not 25%, but 40% of total annual bank investment in the green economy by 2020. Our financial results for last year, among them our profit of 800 million euros, were encouraging, particularly so given the difficult economic environment. Our AAA rating, reaffirmed last year by all three major rating agencies, is testament to the fundamental strength of our business. The geopolitical tensions in our region are not going to be resolved quickly. Added to this, economic growth is below potential. Average growth in emerging markets has halved since 2010, and the need to reverse that trend is now acute. But the difficult context goes beyond growth, goes beyond geopolitics. Climate and environmental change, demographics, inequality, threats to social cohesion, differing views on globalization, the free market and democracy. All of these factors are likely to influence the world around us, often in adverse ways. And yet, I do believe that the principles on which we were founded, support for the transition to open and sustainable market economies, the emphasis on the private sector, and the importance of our policy work, those still remain as powerful today as they were 25 years ago. We can, I believe we will, have a decisive influence on change across our region in the years to come. Thank you very much.